Hello financial investors and welcome to the channel. My name is Brent and today we are going to be doing our stock market weekly recap for the 16th to the 20th of March 2020. I like to do these videos for a historical reference. That way we can take a look at what articles were posted here on Facebook, the index changes for the week, stock futures, what we were expecting for the upcoming week. Take a look at the entire S&P 500 performance as a whole over this past week, and then we dive into oil, the dollar, silver, gold, bonds, and mortgage rates. So I like to kind of keep track of this data every single week. That way, in the future, we could always take a look back at these videos on a weekly basis and kind of see what was taking place here, the event that caused what caused so much volatility here in the market. So with that said, if you are brand new to my channel, I would really appreciate it if you do hit that subscribe button below. If you do enjoy this video, find it helpful, definitely give this video a thumbs up. And if you have any comments or questions going over this video, the stock market, dividends, want to let me know your take on what is currently going on here in the market, or just overall in the world view or in your local town, let me know how has your reaction been throughout this whole process. Are you currently locked down? Have you left your home in a week? I'd like to kind of hear from each individual out there just to kind of see there's so many different things happening all at once. So with that said, let's go ahead and get into the video. So last week Sunday, Fed came out. Actually, the Dow plunged by more than 1,000 points, caused the circuit breaker to go off, and we were down over 5% there. Stock futures being down 4.77, 4.54, 4.53, and the Dow had plunged there 1,000 points due to the Fed's cutting rates from 1.25 to 0.25, basically a 1% cut right there. We also kind of covered two articles. I have these both on my Facebook page, and they just kind of went over the Fed's moves as to why they cut rates and their plan of launching $700 billion of quantitative easing. Now, in this recent week, we have seen that the Fed is coming out. They've announced that they're bailing out Boeing. They've announced that they're bailing out financial institutions. They're bailing out, I believe, airlines as well. There's tons of bailouts going out, and that is just debt getting printed off. It's money being created out of thin air, but that is debt. A unit of measurement or currency is just a unit of debt. So that's just more debt, more zeros being added on, deflating our dollar. So crazy amount. It's hard to know what'll take place even just a few days from now in today's market. So continuing my dollar cost average program, which is what I'll be doing here on Monday. I have another video coming out here on Monday, kind of going over what stocks I'm planning to buy. I am going to continue buying into a few here, I think, during this downturn. Obviously, I'm not going to stop dollar cost averaging. That is my plan on my wife's Roth IRA. Every week, adding that $115.38 plus the previous week's dividends. So stay tuned for that. Definitely check that video out. I did come out kind of talking about, because the Fed did cut interest rates, other online savings accounts have been affected. SoFi Money lowered their rate from 1.10 to now 0.10. Huge difference there. Basically, any other traditional banks such as Chase, JP Morgan, even credit unions have very similar rates. So not a big one there. SoFi Money, I may eventually trade money elsewhere. We'll see. Wealthfront offers 2.6 or 0.26. Robinhood offers 0.3. Ally Savings has not changed, but it could change in the future. It is offering 1.5%. Marcus is also offering 1.7%. I've already moved capital over to Marcus from Wealthfront, so that's where my capital has moved, and I've locked it into no penalty CDs at a 1.7 or 1.75 or 1.8, somewhere within that range. It's a no penalty CD. That way I am making some amount of interest on my capital while it is sitting, and if I ever do need it for whatever reason, such as I buy another property, I plan to invest it, I can pull certain amounts out of it with no penalties, and I can continue to keep my rate there of 1.7 regardless of what goes on here in the future with the Fed. So that is something here I want to kind of showcase. 5 dividend stocks that can withstand this current storm, basically kind of going over and covering some dividend aristocrats and just really really great companies that have just been positive here during this downturn. Oh, two of them have been positive during this downturn. Three of them have not, but they haven't fallen as far as the market. Basically, a third of what the market has fallen. These companies are currently have fallen in the past, but then quickly recovered. Ford suspended their dividend. Boeing suspended their dividend this past week. Carnival Cruise, I believe, suspended their dividend as well. There's lots of dividend suspensions going. I also decided while looking at my portfolio that I did decide to sell at a two positions here. I posted this over on Facebook. I didn't post it anywhere else. So if you're following me over on Facebook at Financial Investor 101, you would have got the information that I did decide on Friday. I sold that at General Mills at a 35% gain on this position, and CVS Health Corporation at I was only positive a few percent, maybe anywhere from 3 to 5%, but I decided to kind of sell out of these positions just because while these are great right now, I think they are very strong companies and contenders for what is currently going on in the market, but these have not raised their dividends for quite a while. They're not yearly dividend raisers, and I wanted to move more capital towards companies that I feel would be better positioned, that have been more affected in this volatility, that where my capital will be put to work a little bit harder, and plus the dividends have been raised on these companies for at least 10 years or more. Actually, I believe Main Street Capital maybe 8 years or so, but I decided to move it and start a new position in Realty Income, ticker symbol O, continue to average into my UGI, Eaton Vance, Main Street Capital, and Genuine Parts there. So I will be continuing to average into positions. I actually have around $2,000 that I am looking to deploy here in the M1 Finance Roth IRA, but that will not be all be deployed at once. It'll be going in here in little segments. So circuit breaker was also triggered here on Monday, currently in the after hours. I just kind of posted this 3 hours ago, but circuit breaker did trigger once again. This is due to the markets overseas, basically in the red currently, just due to what recently took place. So they're not going to be going forward with a bill that was supposed to be signed. And due to that, the Dow futures fell, hitting a limit down. Basically, you're just going to get it halted for the futures. So that is what was going on right now. If you guys would like to check out that article, definitely head over to the website. It is the CNN Business. If you click on markets, it'll basically be the only article here. I'll go ahead and include this in the comment section below. I just won't click it and say the title and such, just because all that fun jazz that's kind of going around on YouTube. Okay, so with that said, let's go ahead and take a look at the four markets. So the S&P 500 this past week alone lost the most percentage that I've ever seen the market lose in a single week. Even during the 2008 downturn, I was not invested in I actually was invested in 2008. I was invested in 2004 through my thrift savings plan, but I didn't start individually, like in my own individual account, until about 2009, 2010 is when I actually created my own account outside of my thrift savings plan. So after I had no idea about investments way back when. All they did is I started my thrift savings plan. They told me to change my plan from G fund to, I believe, the C fund or S fund. I changed to the C fund, and I rode with the S&P 500 up until recently. So, well, I'm still invested in the C fund, but the same thing kind of goes on here. This is kind of going back to this, overall, this is one of the biggest swings I've seen any single week. I'm sure it's not going to be the smallest. We are down for the week 14.98%. Now putting us down year to date 28.66%. The Dow Jones down 17.3%. The Dow Jones is definitely going to be hammered a lot more than the other indexes. This is because there's only 30 companies within the Dow Jones. And if any of these companies within the Dow Jones decide to cut their dividends, such as Boeing, which has been hammered year to date, going down over 70%, they're 70.83%, also cutting their dividend. And there's an article getting floated around that if companies decide to take a bailout from the Fed, that they will have to suspend their dividend. They will have to suspend their, I don't know if they'll have to suspend their buybacks, but that definitely needs to be part of the program where they will have to suspend their dividends. They will no longer be allowed to repurchase shares in the future, because Boeing spent billions of dollars these past few years buying back more shares at inflated prices. instead of creating a rainy day fund or an emergency fund, as most of normal investors should have, 3 to 6 months of emergency savings for events such as this. So any of these other companies can also decide to cut their dividend, such as, I'm not going to go down the list, kind of picking out companies, but Cisco could potentially cut their dividend. Disney could potentially cut their dividend. I believe they actually both have low payout ratios, but I'm just kind of giving examples. So all of these can kind of cut their dividends at any time, and that would cause the market or the stock itself to sell off pretty high. So I'm not sure if any of these other positions would really have potential to cut their dividends. JP Morgan, if they're going to get bailed out by the Fed, JP Morgan will cut their dividend once again. So they cut it during the past recession. They're more than likely going to suspend their dividend in the future as they get bailed out. Okay, so that is the Dow Jones, down 17.3% in a 5-day change. The NASDAQ, the best performer of all the indexes here, down 12.64, still down pretty good, and down for the year 23.33. The Russell 2000, this is your small mid-cap companies getting destroyed out there by basically having to close their doors and not allow anyone in. They're basically, many of in my local area here in Oregon, a lot of the small businesses, if they don't have drive-throughs, if they are only walk-in, they have closed their doors. No one's allowed in. They have a sign out front saying that they've closed indefinitely, and until times have changed, they are not returning. They've laid off people from their jobs, and they're now getting unemployment. So what is kind of going out there in the job market is the numbers came out somewhere, I don't know, there was a float where we could have a massive, I believe it was 20 some percent job unemployment rate here in the future. So that is up on the horizon as well. So the Russell 2000 of all the indexes will more than likely get hit much harder. And once this whole thing does eventually recover, we're not sure if it will, eventually it will recover. Things eventually have a point where it just begins to die down. But the Russell 2000 will probably have the best to gain, just because all those jobs are still out there. All those businesses are still there. They're just waiting for what is taking place to kind of surpass. And then it'll kind of go back into the emotions. So here we are, after hours. We already kind of discussed it. This is not showing the current data. The Dow Jones is actually negative 5%. This is showing 4.02, but it actually fell by 5%, hitting that trade, the halting, and all of these are going to just hold it in place. So you'll see the indexes probably open red and may trend lower on the day. So here we can see Hong Kong is currently open and they are down 4.34%. So to be expected, and that's not one I'm too worried about. Here we are. Here's Friday. So if you're looking at the week, let's go look at the week performance. That's what I want to kind of focus on. We can see Amazon in the green up 3.42% on the week as more consumers are moving to have online buying online. I'm not sure how it is in the Seattle area, if you're able to purchase groceries still online. I know some of the big metro areas, you were able to purchase groceries and have them delivered to your home. So I'm not sure if that's a big portion of Amazon right now or if they're not doing that. But overall, a lot of consumers are not ordering, going to the store and just picking up their shirts, their clothes, their belts, their normal items. They're ordering the stuff from Amazon. They might go to the store to buy their local food, but other than that, they may not be going out to just kind of look for bargains and look for specific items. So they're doing a lot of their shopping on Amazon, and that one's kind of bouncing higher. I would like to own Amazon. I don't have a specific price point that I'd like to enter into it, but it's one. I actually do own, I believe, a little bit, but not enough. Not enough there. Gilead Sciences up 3.55%. Lumia up 3.72. Over in the technology, we have Citrix up 4.98%. Interesting there. But overall, we can see a lot of red out there in the market. Financials continuing to get hammered here. Wells Fargo down 14.21. JP Morgan down 20% in a week. So they were worth not too long ago, I believe they were in the 100 and some Let's go look. JPM. I'm not sure how their high was, but it'll show us right here at the top. They were worth $141 at 52 weeks ago. Just within this past year, they were worth, at their high point, $141. They are now down to $83.14. So I believe JP Morgan will eventually suspend their dividend, and it's coming here in the future. I do own JP Morgan. I would like to sell it, but we'll see how this kind of plays out. I may eventually sell it into the red and buy into another financial or another company that's also into the red a little bit further. That way I'm just kind of moving equity that's down, but I'm getting another position that's also down either just as much or even further. That way when it does bounce back, it'll be similar to JP Morgan bouncing back, but it'll be in another business that's bouncing back, and it'll be a company that I'll enjoy more holding on to for the long term. So oil down for this week, 29.17%. You thought this last week was bad, where they lost a good chunk after the Russia-Saudi Arabia deal? Nope. They're down for the month, now 55.82%. So oil continuing to get hammered. They did have some lows there on Wednesday of below $4.50 before kind of quickly getting picked back up to about $5.50. We're not sure where this range will kind of hit. I do see oil being pretty cheap here at $4.50. This range right here hasn't been seen. I think it's 15 years or so. All these oil companies, Chevron, Exxon, I think they're at 15-year lows. The dollar is moving higher for whatever reason. I don't know why. I would think with the Fed pumping as much debt and dollars into the market, it would kind of drive the dollar weaker and weaker and weaker. But for whatever reason, the dollar is getting stronger. So if you that are watching this right now have an idea as to why this dollar is getting stronger as the Fed is printing out more of it, let me know in the comment section below. I'd like to kind of see your feedback, but for historical reference, I'd like to cover this that way in the future. During these times of these events, we can kind of look back and say, man, these markets were hammered. The dollar, for whatever reason, moved higher. We'll kind of see how the next one kind of plays out and compare. So silver going to lows here recently of $10.86 this week. So right about here on Wednesday, they hit a low of $10.86, and they are currently down 30.25% for the year. Over the past 5 days, they're down 15.01%. So silver, gold are basically negative right now. We have gold down 2.21%. Yeah, not sure what to say on that. I think silver is down just due to what's kind of going on in the economy. All these businesses are closed. The need for silver to be used in many products right now is kind of a stall. A lot of businesses are no longer using steel at this time just because it's not a needed commodity with all these businesses being closed. So that drives the price down here in the short term. But as businesses kind of pick back up and the need for silver picks back up, the demand for it, and just rebalances back to where it should be, we may see silver once again move higher. But as far as finding a bottom, this would need to have some support here, maybe hit it again and bounce back, kind of showing some support. Gold, we already saw that, down 2.21. Bonds are also down. I've seen bonds continue to trend kind of lower here over the past month. They're down 4.22%. So regardless whether you're in equities or with bonds, you're still negative in the market. Maybe not as much, but you're still moving to the downside for for what's currently taking place here. I did move out of my bonds within my thrift savings plan. I was in the G fund a bit ago. I moved those back into the S&P 500 C fund, and I've left it there untouched. Also, the 10-year is moving higher. It was about 0.64% the past week, I believe, when we did the recap. It is now at 0.94%. So, interesting there. Kind of short term, very negative right now. Negative 0.03 in the short term. We're looking at the 10-year at 0.95. Previous, I think Friday then. I don't know if this is just on a day by day, but previous it shows 1.12. And then mortgage rates. Mortgage rates actually bounced higher to 3.88. Just the previous week, prior to the Fed coming out and announcing that rate cut by 1%, mortgage rates were actually at their lowest prior to the Fed 1% rate cut. Once they cut that rate cut down to 0.25%, that did not cause mortgage rates to lower by 1% down into the twos or ones. They are continuing to kind of rise slowly, picking back up. You can still see people getting rates of 2.75 as low as that. You just have to shop around, and it's very, you have to just kind of look. So I haven't found anybody offering in the twos, but if you're getting a personal mortgage, I'm sure there are a few financial institutions out there who are offering 2%, 2.75 to 3 mortgage rates for 30 years. So that is basically all I wanted to cover in today's video. There's nothing else that I really posted. So that is going to be it. Let me know in the market. Let me know in the comment section below. What do you think is going to take place here? Do you have any not what's inside your mind? What's kind of going on inside your mind as far as what your take on the market is? I do believe that the market is going to continue to trend lower. There's no reason for it not to as we persist through this downturn and more people are finding unemployment. And that's not to say that we won't recover. It's just going to take some time. And until we find that little shimmer there where we kind of hit our all-time low, that is, it's in the future. It's unforeseen. So that is going to be it for today's video. Subscribe to this channel if you have not yet subscribed. If you did enjoy this video, find it helpful, entertaining, definitely give me a thumbs up. I like to do these videos again just for historical reference. We may not, obviously I don't know what is going to take place here in the market or know every single piece of what is going on in the market, but I think it's interesting. I like to record this just so that I can look back in the future, maybe a year or two ago, and look at the Dow Jones at 19,000 points when we were just at 34,000 points not too long ago, and say, dang, we went through that event, and here we are 1 year, 2 year, 3 years from now, and we are higher than we were. We invested, we continued trudging through what is currently taking place, and we came out ahead because of that. So if you're like me, continue on and let me know in the comment section below what you are doing. Okay, thank you all for tuning in. I will see you next time. Have a great day. Bye.